The Fed said U.S. economic activity had picked up and job gains were solid in recent months. The case for an increase in the federal funds rate has strengthened, the U.S. central bank said in a statement. Following a two-day policy meeting, it added that its rate-setting committee had decided against raising rates for the time being, until there was more evidence of progress towards its employment and inflation objectives. The Fed has held its target rate for overnight lending between banks in a range of 0.25% to 0.50% since December, when it raised borrowing costs for the first time in nearly a decade. The central bank has appeared increasingly divided over the urgency of raising rates. On Wednesday, Kansas City Fed President Esther, Cleveland Fed President Loretta, Mester and Boston Fed President Rosengren dissented on the policy statement, saying they favored raising rates this week. At the same time, policymakers cut the number of rate increases they expect this year to 1 from 2 previously, according to the median projection of forecasts released with the statement. 3 of the 17 policymakers said rates should remain steady for the rest of the year. The Fed also projected a less aggressive rise in interest rates next year and in 2018, and cut its longer-run interest rate forecast to 2.9% from 3.0%. But in a sign of growing confidence, the Fed said the near-term risks for the economic outlook appear roughly balanced. That means policymakers think the economy is about as likely to outperform forecasts as to underperform them. The Fed in December signaled that 4 rate increases were likely this year, but that was scaled back in March due to a global growth slowdown, financial market volatility and concerns about tepid U.S. inflation. The economy expanded sluggishly in the second quarter and added fewer jobs than expected in August. Inflation also showed signs of stirring last month. The Fed has policy meetings scheduled in early November and mid-December. Economists believe policymakers would avoid a rate hike in November in part because the meeting falls just days before the U.S. presidential election.